Okay, we are returning for the third part of our lesson, and we are doing the weighted average. This is the third method. Let's just quickly go back to the weighted average. Is the weighted average cost is calculated based on the available stock on hand. And now we're going to do an example on that. We did the first in, first out method, and also let's just return there. And we also did the specific identification one. And now we are doing the last one. So your cost of sales calculation is based on the following. We do, if you can see over there, we are doing the total value of, sorry about that. Let's just do that. The total value of units available to be sold, and we divide it by the number of units available to be sold. So we take the value of the units and we divide it by the number of units, and then we get the weighted average cost. Oh, I want to underline all over the place. So let's just refer back. We are still back on our bicycles, and now we are going to calculate the number of bicycles on hand, the unsold units, and we are calculating the value of the closing stock as well as the cost of sales. And also we are using the trading account to calculate the gross profit. So we are doing everything in one, where we did it separately in the previous examples. If you remember correctly, we are here with our information again. We have our bicycles on hand. That is the 6 bicycles on hand at 1,000 Rand. There are 6,000 value. We have the purchases during the month was a total of 27. You remember that, and the value was 37,500. And then we have that was made up of the 2 different sales, purchases at 12 and 15. Then we returned 2 of them, and we are sold 18 bikes. Remember, our purchase prices are different over there. And then, yes, we sold them, and now we are working out what was the closing stock. The solution is then the number of rally bicycles unsold. So we are doing the unsold one. We say the number of units in the beginning was 6. Then we purchased 12 and then 15 again. So it's a total of 27. We would subtract, so we add what we purchased from the closing stock of the previous month, the beginning of the month opening balance. Then the 6 plus the 27, we minus the returns, the minus 2, and that equals 31. And then we minus the units being sold, that's 18. And the total number of unsold units at the end of the month is then 13. So this is the easy part. I think the more you are going to do it, the better, and practice it with the examples, the better it will be. Now we do the value of the closing stock. So we did the number of. Now we take the total value of units available to be sold. We're going to divide them by the number of units available to be sold, and that will give us the weighted average cost per unit. So the weighted average cost per unit times the number of unsold units will give me the closing stock. This is formulas that you must remember and study. We take to get the total units to be sold, we take the 6,000 in the beginning plus the 37,500 that we bought minus the 2,500 that we sent back, and we divide it by 31. That is the total to be sold. So if we just return quickly over there, so we take the 6,000 plus the 27,000. So, and we subtract the 2, and we get the 31. There it is. Okay, so it work it out for us. The 6,000 The 27 minus the 2 is then the number of units to be sold is 31. That is our amount over there, the 31. And that is 1,322 and 58 cents. That is our weighted average cost per unit. Then we go this further step. We take that amount, 1,322 and 58 cents, and we multiply it with the 13 units that's left. So our closing stock is then 17,193 rand and 55 cents. The cost of sales for September on the Rally bicycles, our weighted average cost per unit times the number of units sold, that will give us our cost of sales. We sold our average, weighted average cost, that's the one we just worked out, 1,322 and 58 rand times the 18 rand, that is the units that we sold. So we sold 23,806 and 45 cents. We use our trading account here to do that. We have our sales, we credit our trading account with the total sales of 48,600. You remember that from the previous example. Remember, our opening stock was 6,000. Our purchases were 35,000 rand, and there's no carriage on purchases and also no customs duty. Our closing stock balance is then over there. It's a 17,193 and 55 cents. And then we see we made a profit of 24 rand, 793 rand. Now, how is the first in, first out and the weighted average method affect the outcome in our financial statement? Because we have the two methods, and how will that affect our financial statements in the end? Let's work it out and see what is the difference when we use the two. So required, we are comment on the effect that the different methods of stock valuation will have on our financial statements. We will look at the cost of sales, our closing stock, as well as our gross profit. So let's have a look here. In a comparison between our first in, first out and weighted average calculation, we see the following. There is our first in, first out, and there's our weighted average. We see in the beginning, it is 6% of the stock, 6 units left, and it's 6,000. That was the same in both. We purchase 12 units at 1,250. And that is 15,000 units, and that is then the value, rand value were 15,000, and it's the same for weighted average. Then we purchase 15 at 1,500, that's 22,500. It's also the same with the weighted average. We return 2. That is the same in both of them, you can see, and then the unit sold is also the same. But here comes the difference. Our cost of sales, the 18 was in, first out, 21,500, and in weighted average, 23,806 and 45 cents. Our closing stock was also different. It was 19,500 in, first out. And it was 17,194,055 cents. Gross profit is 27,100, and in weighted average 24,793 rand and 55 cents. So you can absolutely see there's a difference between the two methods. And the way is the value of the closing stock and the cost of sales. The difference comes in how that is determined, and the cost of sales will in turn affect then also our gross profit. So you can go and just look through the examples again, and you remember we already worked out everything. So we have to go and comment on the cost of sales, the gross profit, as well as the closing stock. So your first in, first out, you can have a look, because if you have in a test or exam have to comment, here's what you can say. So the cost of sales has a lower value in the income statement, thereby it is increasing the gross profit. In the weighted average, the cost of sales has a higher value in the income statement, and that is decreasing our gross profit. The gross profit with the first in, first out, the gross profit has a higher value in the income statement, and it is increasing our net profit, because the profit is higher and more tax will be paid. The weighted average gross profit is a lower value in the income statement. That's decreasing our profit, and that the net profit that is lower will be less tax to be paid. And the closing stock, this will appear in note 4 in your inventory in your financial statements. First in, first out, inventory amount in the balance sheet will be higher. That will reveal a higher current asset value. This has a positive effect on our current ratio, and a higher asset value will be disclosed, which will also have a positive effect on our NAV calculation. In the weighted average, inventory amount is in the balance sheet will be lower. That will reveal a lower current asset. This has a negative effect on our current ratio, and a lower asset value will be disclosed, which will have a negative effect on our NAV calculation. So you can see there is some consequences in the different methods. If we look at the weighted average method and the perpetual stock system, this is our last part before we close our inventory system. The weighted average method of stock valuation can also apply to a business using the perpetual system of stock control. Remember, we did the periodic one with the bicycles. When we use the perpetual stock system, a new weighted average cost is calculated each time new stock is purchased. And the same value formula will be used, where we use the total value of units available to be sold divided by the number of units available to be sold. Now, here's our example. We have the sunglass hat, and we see that in February, the stock on hand in the beginning was 200 sunglasses at 320 Rand. They purchased 100 sunglasses at 340 Rand. The sales were 210 sunglasses at a selling price of 500 Rand. They purchased at the 18th 300 sunglasses at a price of 312. The sales at the 23rd were 136 sunglasses at a selling price of 500 Rand. We have to do the value of the closing stock, the cost of sales value, the sales amount, the gross profit, and if the business used the periodic system, work out the gross profit. So on the first, the stock on hand is 200 at 320. They purchase on the 4th 100 at 340. On hand after purchase is then 300 Rand. So we add the 100 plus the 200. We work out on the different prices, 200 times 320 plus the 100 at 340. And we divide it by 300, our weighted average. And we get the average is per unit is 326 Rand and 67 cents. So you see, they work it out on all separately. Now we have our sales on the 10th. That's 210 units. The cost of sales is 210 times 326 Rand and 67 cents. We work on that one. Okay, over there. On hand after the sales, we subtract the 210 from the 300. we see the number of units are 90 on hand, and that is at 326 rand 67. We purchased on the 18th another 300 at 312. Now we work out on hand after purchase. That is 90 plus 300 is 390. We have to work out the units on the 90 times 326 rand and 67 cents plus the 300 at 312 rand, and then we divide it by 319, and the new average is then 315 rand 39. Then on the 23rd, our sales were 136 units that we sell, and we sell it at the new average of 315 rand 39. And on hand after the closing sale is 254 at the 315 rand 39. So remember, we subtract again the 319 minus 136. Now we have to work out the value of the stock, closing stock. That is the 254 at 315 rand. So we multiply those two, and that gives us 80,109 rand and 6 cents. Our cost of sales, we multiply the 210 at 326 rand 67 cents plus the 136 at 315. You've seen we take then that one over there, the 210 at that price, and we take that one there at 315, and that gives us the amount of 111,493 rand and 74 cents. If we work out our sales, we see that we sold 210 plus 136, and that's 346 at 500 rand, and the total sales is 173,000 rand. Now our gross profit, we work it out as follows. This is our trading account. So remember, our trading account are debited with the cost of sales. That's the 111,493,074 cents. We credit our trading account with the 173,000 of the sales, and then our profit is 61,406 and 27 cents. Our gross profit using the periodic system is there's our sales, the 346 times 500 is the 173,000 rand. We will subtract our cost of sales, the 110,490. And how did I get to that? I take the opening stock, 200 times 320, 200 times 320 there, that's 64,000. My purchases were 100 times 340 plus 300 times 311, that's 127,600, and I subtract my closing stock of 81,109 rand and 82 cents. That is the 245 we see there times 319 rand and 33 cents. Okay, so how did I get to that? There is it, the number of units on hand. This is the unsold units. So that is the 200 plus the 100 plus the 300 minus 346, and that's 245. My formula at the weighted cost is the 64,000 over there plus 127,600. And I add up all those, and that gives me the 319,300. the amount that I used over there. Okay, so you see that amount. Oh, sorry, that amount is there. Good. And now it continue. My unsold units is then the 254, and there's also you can see the difference between the value of closing stock. There's a difference between the two over there. The sales are the same. The cost of sales is also different, and the gross profit will be different. And because the way in which the closing stock is calculated when the different stock valuation methods are applied, the outcome of the cost of sales and the gross profit differ. The closing stock calculation has no effect on the cost of sales amount, and particularly when the periodic system is used, and when the cost of sale amount directly affect the gross profit. This is a lot of new stuff. Please go through all the notes, the examples, and then you use your information from your examples to start doing your activities. And it's best to do them more than one activity, that you really see that you understand. If you are doing the activity, go back and see exactly what I did in all the other activities. See what they ask, and don't do it by yourself. Go back to the examples. And then if there's any questions, please contact us, and I will, after every unit this term, I will put a formative assessment. This is to check, and then I will make a video from the formative assessment from there on.